It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast, where we break down the Australian property market. And how are you finding the current market conditions at the moment? Is there something that you would like us to explore more deeply on? Now, if you've got a question, an idea, or a real estate concern that has been on your mind, what you do is you send it through to us. This is a growing community of listeners, and the more insights, opinions, and experiences that we share, the better the conversation becomes. If you've got one of those, you can send through a voice message using the link below, or you can email us anytime. Our email address, myrealestatepodcast@gmail.com. Well, it is the 1st of May, and it's a Friday. Looking forward to another weekend. I see on this day back in 1994, Ayrton Senna unfortunately died during the San Marino Grand Prix. Also on the same day, back in 2011, Osama bin Laden was taken out in Pakistan. Famous birthdays. If you're blowing out the candles today, many happy returns. Rita Coolidge, I'm old enough to remember who she is. She is turning 81 today. Now, how big is this coming Tuesday's RBA meeting? It seems that commentators are divided on whether the RBA will increase the rate by 25 or 50 basis points. Key inflation figures for March. That is now up to 4.6%, up from 3.7% in February. Main price drivers, transport, that surged by 8.9% annually, driven by a massive 32.8% monthly spike in petrol prices, linked, of course, to the global oil supply issues. And housing. Housing increased 6.5%, remaining one of the largest contributors to the high. And when we're talking about the rates, there are people who simply will not be able to afford a 25 basis point rate rise, let alone a 50 points. I mean, this is bad. You cannot sugarcoat this. It is a global problem, acutely right now felt right around the world. So let's take you to Melbourne and catch up with Jeff Anderson from Anderson Property Advisors. And welcome back, Jeff, to the Real Estate Breakfast. I really do wish that it was more positive news for the 1st of May, but that's what you get when one man goes rogue and turns the whole world on its head.
Hi, Craig. Thanks, and nice to be back. You've covered a lot of topics there, for sure. Certainly, the market in Melbourne has been gradually getting softer. For the first time in 5 years, I'm getting estate agents call me after inspecting properties, almost pleading with me to make an offer. Would I like a contract? Emphasising how negotiable and open they are to selling prior to auction. That hasn't happened for 5 years. And your comments earlier about the upper market, I guess the 2 to 7 million sort of band, particularly in the Bayside area of Melbourne, those properties are postponing and cancelling auctions a week before the auction due to absolutely no interest. I've seen properties drop from 7 down to 5.5 million and still not attract an offer. So top end's very wobbly, middle end is good, and bottom entry price is still pretty strong.
Yes, the recent data, it does show that Melbourne's values slipping again, marking those multiple consecutive months of mild declines. It's not a collapse, we should say that, stress that. It is more of a market pause driven by these higher rates, affordability pressures, and cautious sentiment. Sentiment is everything when it comes to real estate. I just want to come back to, the buyers. They've definitely got more time. That is what most people seem to be telling us, Jeff. More time to transact and probably put some more of those clauses in the agreement that, you go back not that long ago, you couldn't get.
No, that's right. Buyers are very, very hesitant at the moment to act swiftly. That's been a very noticeable change. I spoke to 9 prospective new clients just in the last 2 weeks. all 9 of them are just sitting on the fence and have not engaged me. Previously, I would have 95% of them engage me on the spot. So there's no sense of urgency. There's no sense of panic. There's definitely fewer buyers on the ground. Agents are telling me that most of the auctions they've got have got 1 or 2 potential bidders versus 3 months ago you'd have 5 or 6. So it's definitely a buyer's market at the moment. I think what is probably keeping the market reasonably healthy is that prospective vendors are not coming onto the market. This is second highest time of the year as far as the volume traditionally, but we're not seeing that in Melbourne at the moment. So I think the shortage of supply is keeping the market pretty steady in the lower price ranges, I'll emphasise.
Yeah, and last time that we spoke, Jeff, we were talking about some of the underquoting, some of the problems in the Melbourne market, and you were finding that extremely frustrating. 2 weeks ago, we did highlight the Joss Tesselin. This is the former high-profile Sydney real estate agent who was banned for 10 years, misconduct that was found, systematic underquoting, dummy biddings, falsified documentation. And also one of the other things was high-pressure sales tactics. And I wanted to talk to you about that this morning because some people might not realise just exactly what that was when it came to Josh Tesselin.
Yeah, sure. Look, the high-pressure sales techniques commonly used throughout Melbourne, and most of the agencies and principals train their staff to do exactly this. The majority of properties in the inner suburbs of Melbourne are actually auctions, not private sale. That has swung around a lot in the last 4 weeks. The buyers that are probably a little bit gullible or not familiar with the way it works is they'll have a look at a property, they'll ask the agent that's booked an auction in 4 weeks' time, they'll ask them whether they're open to offers prior to auction. The agent will say, well, sure, if it's a good offer, we'll certainly put it forward. They're open to offers. They secretly know they're not going to take any offer before auction. That's just a sales ploy to underpin the market, to get somebody to table an offer. Then they'll decline it the next day. Sorry, the owners have decided to go to auction. And then they'll use that offer to leverage other buyers. The buyers are all feeling that there's someone else breathing down their neck. And I guess the fear of loss is probably the biggest emotion I think we've got. Once you've taken something away from somebody who wants it, they tend to go into panic mode. And that's generally what happens. Mysteriously, there's always another buyer that pops up once you make an offer. What they don't explain to you is that offer or the other buyer might be substantially below the figure that you've offered and substantially below the number that the vendor is expecting. They won't go into that detail, but they certainly use your initial verbal offer to leverage that against you, yeah.
Okay, well, that's good to table that this morning. We are talking with Jeff. When we come back, we are going to look at 3 expensive suburbs in Melbourne versus 3 affordable suburbs. We'll do that after this.
Listen to expert perspectives with exclusive real estate conversations and supercharge your knowledge base with us. Eager to expand your property expertise? Enhance your real estate know-how with us.
And we talk about Australia having economic woes. Across the ditch, New Zealand's economy is also increasingly fragile at the moment with weak consumer spending, softer business confidence, and housing activity still subdued. In fact, I've got a friend in Auckland who have had their property on the market for 5 months plus with no sign of selling the property. In fact, some economists expect New Zealand to head into a recession in the next 5 to 8 months. It is a Real Estate Friday. Jeff is with us, and we're going to have a look at 3 expensive suburbs in Melbourne and 3 of the cheaper ones. No surprise that Toorak is right up there with a median house price of 4.8. Gee, look at the house growth. That has gone into minus territory, minus 14% over the last 12 months, and that is off the back of what Jeff was talking about. Canterbury, that is around that 3.6 million. That is up 6.1%. Brighton at 3.2. 3 of the cheaper ones here, Jeff. We're talking about Melton South. You can pick up a house there, 430 grand. That is up 7%. Broadmeadows, 470 grand. That is up 9%. And Werribee, 560 grand. That is up 6% for the year. We'll get to those units in just a moment, but I still can't believe we're talking about, these outer suburbs, Jeff, of Melbourne under 500 grand.
Yeah, it's quite amazing. There's excellent value, and I think that market will continue to rise against the trend, primarily due to the fact that the affordability, and 70% of buyers that I'm dealing with are first home buyers, and that's the territory they're after, 500 to 700 price range. Geelong, just past Werribee, has been another really hot spot that's been flying for the last couple of years, and further out towards the southeast, areas like Pakenham, Cranbourne, they've been going really strong as well, but I have been encouraging buyers to buy in the northern suburbs for the last 12 months, and your data absolutely reflects that good advice, because that area, anywhere from 5 kilometres north of the city all the way up to Tullamarine, the airport, Craigieburn, those sort of areas, they're certainly hotspots and very affordable still.
We talk constantly about the unit market, which, if you look at Melton South, you can get into a unit there for 325 grand. That ain't bad.
Yeah, look, it's exceptional. And again, I have been recommending to clients, the investor clients, to buy single level units. A lot of buyers get confused with townhouses, 2-story townhouses. They think that they're units. They're not. They're townhouses. That's a market in itself. Single level units have been, I think for the first time in 40 years, have outpaced house appreciation by 8% in the last 12 months. And I think that's primarily due to the ageing population and the fact that people still want their independence. Units are a fantastic, you've still got your independence, your freestanding. There's not necessarily a large body corporate or owners corporation. And of course, you still get a good, generous size garden allotment to have the dog run around or plant some veggies or have a little garden, which is what most people approaching retirement are looking for.
How nervous are you for next Tuesday with the RBA? As I mentioned, those numbers, it is giving the RBA plenty of fuel to say, well, we've got to up the cash rate here. I mean, some are saying, as I mentioned, maybe 50 basis points. It'll push some people completely over that cliff.
Absolutely. A 0.5 of a basis point increase would be catastrophic, in my opinion, for the market. People are certainly expecting 0.25, but if it comes at 0.5, I think the market's going to really start hemorrhaging. A lot of buyers in the last 3 years have borrowed up to their neck. That was back when interest rates were 2.5%. So they're going to feel it big time. I don't think that the market's going to, it's not going to be able to absorb another increase after that if it is 0.5%. Perhaps in June, July, if the inflation and the war doesn't finish and the Strait of Hormuz doesn't open, we're probably going to have inflation fly past 5%. The Reserve Bank will have no choice but to keep getting aggressive, which I'm not looking forward to. I'm personally not nervous about it, but I know a lot of my clients are.
Yeah, nervous times. It's just unbelievable. We're talking about the Strait of Hormuz, as you mentioned. We'd never heard of it, a few months ago. But now everybody is talking about it. All right, thank you for that, Jeff. Good to catch up. You enjoy your weekend, and thanks for coming on to the Real Estate Breakfast this morning.
Been a pleasure, Craig. Thank you, and we'll speak again sometime down the track.
Every morning from 6 a.m. across Australia, we deliver you the latest property news, commentary and predictions from Perth to Cairns and from Melbourne to Brisbane, 7 days a week.
In Australia, the trend is that we're building larger homes with more bedrooms for the people that need it the least. The 80% of the market that wants to rent a property is actually a single or couple. And so while we're building these large family homes, we've got these family sizes getting smaller and smaller.
Yeah, because I've seen these videos where somebody's converted a house, and it might be a 4-bedroom, might be a 5-bedroom property, and they've set them up as completely separate.
We converted a 3-bedroom, 2-bathroom, multiple living area property into 6-bedroom, 6-bathroom, 6-kitchenette, 2 main kitchen properties, and fully furnished it in the 48 hours. And each person has their own sitting area, their own courtyard, their own bathroom, kitchenette, and they get to share the common kitchen and laundry.
We connect you to the best real estate information across Australia. The Real Estate Podcast.